The half of the notes which you made, have you understood? Have you gone through the recorded video?
Yes, ma'am.
So you understood till there, na?
Yes, ma'am.
Okay, fine. If you have any doubts, kindly ask me. Then only I will come to know what you are not understanding. Okay?
Sure, ma'am.
Yeah. So take the dissolution chapter. We are in that only.
Yes, ma'am.
Page number 7.
Yes, ma'am.
Yeah. Just a moment. Page number 7, this question we did, I think, in the last class. Just a moment. This question finished. I have finished this question in the last class. So now we have to do take page number 11.
Yes, ma'am.
Yeah, this question we have to do. Question number 2. Ashish and Kanav shares profit in ratio 3:2. There are two partners, Ashish, Kanav. They want to share their profit in the ratio 3:2. On 31st March 2018, their balance sheet was as follows. Balance sheet is given of Ashish and Kanav. So first always see, is there any distributable item? So first we will come in the liability side. Trade creditors, employees provident fund. Then Mrs. Ashish loan, MRS. Mrs. Ashish means Ashish is the partner and this is Mrs. Ashish loan. Remember one concept in dissolution. Whenever you see any partner's loan, suppose, just a moment. Yes, Pavitra, good evening, dear.
Good evening, ma'am.
Yeah, take page number 11, dissolution, page number 11. So, suppose any partner has given loan to the business, then you have to show partner's loan separately. That will not come in the realization account. So, kindly write it down. Whatever I am saying, these are the concept. If you don't know this concept, question will go wrong. So, kindly write it down as important note. Like you can put star or 1, 2, 3 for your understanding and for your revision. So, kindly write it down. Whenever any partner has given loan to the firm, where you will see that in the liability side of the balance sheet, if any partner's loan is there, then you should not transfer it to realization account. You should prepare a separate partner's loan account. Kindly write it down this. This is not partner's loan. This is partner's wife loan. Partner's wife has given loan and she is external liability. She is not a partner. She is external liability. So her loan you can transfer into realization account. Credit side you will transfer her loan. So try to understand the concept what I am saying. If any partner has given loan to the business, you can see that in the liability side of the balance sheet that will not be transferred to realization account. But if any external liability is there, like Mrs. Ashish loan is external liability, she is not partner, that you can transfer in the credit side of realization account. Kindly write it down these points. It will help you a lot. Now the next, WCR, Workmen Compensation Reserve. Already I taught you. So first you have to check the adjustment. Always remember, again there is a concept in dissolution for Workmen Compensation Reserve. Always you have to show whatever claim is there. By reading the adjustment you will come to know if there is any claim by the workers, that claim amount you will show it as liability in the credit side of realization account. Then the same amount you have to show it as payment in the debit side of realization account. For example, if in adjustment it is given workers claim is 1000, for example, then what you have to do, that workers claim 1000 only you have to transfer in the credit side of realization account. By transferring means you are showing it as liability simply, and of course it's a liability. You have to make payment to workers that 1000 only. So in the credit side you will write by workmen's compensation fund or claim, whatever you can write 1000. And simultaneously in the debit side of realization account you have to write to bank. You are doing the payment to workers 1000. And see, workmen compensation reserve 20,000. Out of this 20,000, 1,000 is the claim. So remaining 19,000 you can distribute among the partners. That will go in the partners capital account credit side. By workmen reserve, compensation reserve, 19,000 in their ratio. Are you understanding, Pavitra, Sachin? What are the treatment in dissolution
Yes,
for WCR? Okay. Kindly write it down there. Don't get confused. It's not like other
Yes, ma'am.
chapters. Yes, Sachin, you said something.
I said yes, ma'am.
Oh, fine. Now next, investment fluctuation fund. Again there is a concept, because dissolution is different from reconstitution like other chapters. Admission, retirement, death, more or less they have some similarities. But dissolution is a separate chapter. Don't get confused. That's why I'm repeating. See, like in admission, retirement or death, what you used to do for the existing goodwill, you used to write off in old ratio, old partner. Here, if in balance sheet you are finding any goodwill that is only existing or appeared goodwill in question, that you can't write it off. You have to transfer in realization account. So this is entirely a different concept chapter. Don't get mixed up with those chapters. So whatever concept I am saying, you can write it down for your better understanding. So kindly put an important note separately, write it down all the points in order to avoid any confusion in this particular chapter. Now see, again, investment fluctuation fund. Always whenever investment fluctuation fund is given in liability side, simultaneously you see asset side. Any investment is given? Yes, investment is given. So whenever investment is given in asset side and IFR, that is investment fluctuation reserve, is given in the liability side, just do the transfer entry, nothing else. Like this investment, this is asset, you have to transfer to realization account. So realization account debit to investment account. In the debit side of realization account you will write to investment 32,000. And investment fluctuation fund you have to write in the credit side of realization account. That's all. No distribution, nothing. IFR you can't distribute here. You have to just transfer because investment is given. Now next, capitals. Capital of Ashish, Kanav, both are partners. You have to transfer in the capital account credit side by balance BD. Now come and check the asset side. Bank 35,000. This will go in a separate account, bank account. You have to prepare a separate account, bank account. There you have to write in the debit side to balance BD 35,000. This stock, debtors, furniture, all are assets. You have to transfer into realization account debit side. To stock, to debtors, to furniture, all. To balance BD assets, all the assets. You can write all the name of the assets in the inner column. Stock, debtors, furniture, plant, investment, and all the amounts, and you can add together and write in the outer column. You are transferring the assets from balance sheet to realization account. See, PL account. PL account in asset side means it is a loss. Loss should be paid by the partners. So it will come in the debit side of partners capital account. Partner will pay to the firm. So their capital account will be reduced. So in the debit side you have to write to PL account, profit and loss account. This 10,000 distribute in the ratio 3:2. Till here any doubt? Pavitra, Sachin, are you understanding how we are doing the dissolution?
Yes, ma'am.
Yeah. Okay. Yes, Pavitra? Okay, fine. Now we will move to the adjustment. What adjustments are given? Ashish agreed to take over furniture at rupees 38,000. Read the question very slowly. Try to understand. Try to pass the journal entry, everything. So see, now what will be the journal entry for this? Kindly write it down everything. You should know each and everything, and after practicing journal entry, accounts, everything, then whatever the question is asking in exam, you can do it. Sometime question will ask you to prepare only realization account. But what I am saying, your concept, your practice should be very, very strong. You should know everything. If they ask you to pass journal entry, you should not struggle. You should know. If they are asking you to prepare accounts, you should know. Anything they may ask. Again I am repeating, don't guess anything, because all these things are in your syllabus. So we can't blame CBSE board why they are asking. They can ask anything, because see, journal entry is in your syllabus. I am talking about dissolution. And accounts, preparation of accounts, both. So what they will give, we don't know. It's better to write everything, to learn everything, to practice everything. So kindly, when I am saying some journal entry, kindly write it down. Okay, so see, now what will happen? Ashish agreed to take over furniture means, Ashish, who is Ashish? He is partner. What he is taking? He is taking furniture, asset of the business. Now, whenever any partner in dissolution takes any asset, he needs to make the payment to the business. This is the concept. Asset of the business, if any partner is taking at the time of dissolution of firm, he needs to make the payment free of cost. He can't tell, he can't take, I mean, because asset should be sold in the market. Then whatever cash is collected, that cash will be utilized to pay the external liabilities, and then the partner's loan, then the partner's capital, and even then if anything is left, that will be distributed as profit. This is the rule. So free of cost, nothing is there. If any partner takes any asset of the business, he needs to make payment to the business. And you all know, if any partner needs to make payment to the business, already he is having account, that is capital account, so his capital account will be debited. So Ashish capital account debit to you can't write furniture, okay, because there is no furniture account now. All furniture you have closed by transferring to realization account. So you have to write to realization account. I am again repeating, since you furniture, this has a debit balance because it is asset, you have transferred this debit balance into credit. Now realization account debit to furniture, you transferred it. Now no debit credit, you have to write to realization account. Just think in this way. Suppose you are selling any asset, forget everything, very simple thing. If you are selling any asset in dissolution, the simple journal entry will be bank account debit to realization account. If any partner is taking any asset, then partner's capital account debit to realization account. Kindly write it down. If any partner is taking any asset of the business, partner's capital account debit to realization account. If any asset is sold normally for cash, then bank account debit to realization account. In both the cases, what you are understanding, realization account is credited. If business sell any assets, cash will come, so cash account will be debited. Cash or bank, anything you can use. If partner is taking, you have to debit partner's capital account. Are you understanding, Pavitra, Sachin? Yeah. Kindly write it down, dear, these journal entries. Now here you can write it down, Ashish capital account debit to realization account 3838. So when you prepare realization account, simultaneously in the credit side you have to write by Ashish capital account 38,000. In the same way, when you will prepare that partner's capital account, where it will come? In the debit side of partner's capital account, to what? Realization account, Ashish amount column, you will write 38,000. So in this question, you have to prepare realization account only. In the last, they are saying prepare realization account. So whatever I am saying, write all the important notes, all the journal entries for your understanding purpose. Simultaneously, kindly prepare one big format of this realization account and start doing the posting. So particulars, rupees, particular rupees, debit, credit. Now I will tell you slowly, write it down everything. If I am moving fast, you can tell me to wait. Okay, both of you. Yes?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay. Now the second one. Debtors. No. The first one itself I didn't finish. And pay off Mrs. Ashish loan. See, now what is happening? Ashish is also taking the responsibility to make payment of external liability. Now you will ask, how external liability? Mrs. Ashish is wife of Mr. Ashish. Yes, you are right. But business, for business, you are preparing book of accounts from business point of view. For business only we are preparing all the accounts, not for Ashish. First, this should be clear. When you are preparing accounts for business, you should always think from business point of view. So, for business, Mrs. Ashish is always external liability. So, business will treat her as external liability. Now, business needs to make payment to Mrs. Ashish, not Ashish. Ashish is the partner in business. He has no responsibility. It's business responsibility. But at the time of dissolution, Ashish is saying to business, okay, fine, I will take the responsibility to make payment to my wife. But it is not personal, it is business. So now what business needs to do? Business needs to make the payment to the partner. Who is partner? Ashish. He is making payment of external liability of the business. Business will make payment to Ashish. For all these, what will be the journal entry? The journal entry will be realization account debit to Ashish capital account. What is Mrs. Ashish loan? You can check. It is 9,000. So, realization account debit to Ashish capital account 9,000. In this way you have to write. So, what is happening? Business is making payment to Ashish, who already paid Mrs. Ashish loan, and it is external liability. Don't forget, it is liability of the business, not liability of the partner. Now, suppose this is a simple case. Simple case means if business is making payment to Mrs. Ashish, then what will be the journal entry? Very simple. Realization account debit to bank. Any expenses, any liabilities, anything paid by the business, what will be the journal entry? Realization account debit to bank account. So, kindly write it down. It's a request. Any payment made by the business, maybe creditors, maybe anything like any expenses, realization, anything paid by the business, borne by the business, then the journal entry will be realization account debit to bank account. If partner is paying business liability like Mrs. Ashish loan, realization account debit to partner's capital account. Here to Ashish capital account. Any doubt so far? Are you writing the journal entry? Are you noting down?
Yes, ma'am.
Okay. Pavitra, are you writing, dear? Pavitra, can you hear me? Am I audible to you? Yes, Pavitra?
Yes, ma'am.
Okay, dear. Fine. So, just I am repeating again. Suppose firm is selling assets, then what will be the journal entry? Bank account debit to realization account. Any partner is taking any asset of the business, then what will be the journal entry? Partner's capital account debit to realization account. Now again I am repeating for liabilities. Firm is making payment of any liability, then realization account debit to bank account. Write it down, all the journal entry, whatever I am saying, all are important. Now suppose any partner is taking the responsibility to pay firm's liability, then realization account debit to partner's capital account. Firm will make payment to partner if he makes payment to external liability. Till here, any doubt anyone is having?
No, ma'am.
Oh, fine. Now, debtors realized 18,500. So, from debtors, firm got 18,500 rupees. Now, what will be the journal entry for this? Bank account debit to realization account. So, in the credit side of realization account, you have to write by bank account, and from debtors how much you got? 18,500. And plant realized 10% more. Read the question very slowly. And plant realized. So see in your question, plant 2,10,000. What the question is telling? Realize 10% more. So how much by selling the plant business received? You have to calculate 10% of 2,10,000 and you have to add in 2,10,000. That much amount you are getting. That is the meaning of this particular line. So by selling plant, how much you got first? What will be the journal entry? Bank account debit to realization account. So in the credit side of realization account, by selling the plant, you are getting 2,31,000. You do the calculation in working notes and see how much you are getting. You have to do everything. Do it yourself. See how much you are getting. Calculate 10% of 2,10,000. Then you add in 2,10,000. That much amount business is getting by selling the plant. You have to show everything in working notes. Now the next. Kanav took over 40% of stock. Kanav, again he is a partner. He is taking 40% of stock. He is not taking the entire stock. You have to understand the language. Kanav took over 40% of stock means you should see how much total stock is there in the business. See the balance sheet asset side, 24,000. He is not taking 24,000 stock. 40% only he is taking. So first you have to always you show everything in working notes. So Kanav is taking 40% of 24,000. Calculate 40% of 24,000. See how much you are getting. So you will get 9,600. If I am not wrong, do the calculation yourself. Prepare working notes, everything, and see whether it's coming or not. Now read the question. At 20% less than the book value. I already told you book value means the value of the asset shown in the balance sheet. So when you calculated 40% of 24,000, you got 9,600. Now this is the book value. They are talking about this amount. But Kanav, he is not taking for 9,600. He is taking 20% less. So you have to calculate 20% of 9,600. Do it. Do the calculation. Then whatever amount is coming, you have to subtract from 9,600. Then it will come 7,680. Show it everything. Kindly do the calculation. I have not shown here. But you have to show, you have to present properly, do it. Very important question. Already they asked in boards. So do it properly now. Now calculate 20% of 9,600. Whatever amount is coming, subtract from 9,600. It will come 7,680. Now in this amount only Kanav is taking the stock. And remember 40% stock. So still 60% stock is there. Either question tells you about that, then it's well and good what to do. If the question is silent, you cannot leave it. You have to sell at book value and realize the amount because it's dissolution. You can't leave the stock. No new balance sheet will be prepared. No assets will be there in business. You have to sell it out. So keep in mind, if your question tells you to do, it's okay. If the question is silent, you can't be silent. You have to sell the 60% of stock at book value. So now come back to question. Now this Kanav is taking for 7,680. Now what will be the journal entry? If any partner takes assets of the business, I already taught you, it will be partner's capital account debit to realization account. Who is the partner? Kanav. So Kanav's capital account debit to realization account. In the credit side of realization account, you have to write by Kanav's capital account. In bracket you can write stock. How much amount he needs to pay to the firm? 7,680. While he is taking 40% of the stock at 20% less. In this way, you have to show the calculations. You will get 7,680. Any doubt till here? How the calculations, how all these things are happening? Yes, Sachin, Pavitra?
No, ma'am.
Okay. So, are you doing the working notes properly and preparing it nicely?
Yes, ma'am.
Okay. If you want time, I am ready to give, but I want the proper thing. So do it properly with proper calculations, presentations, everything. Okay. Now we
Yes,
are, yeah. Now we are moving to next. See, they are saying something about the remaining stock, I think. Yes. Remaining stock was sold at a gain of 10%. So, the question is telling you that the left out stock was sold at a gain of 10%, means at a profit of 10%. Now, very easy. See, total stock with the business was 24,000. 40% one of the partner took. So remaining will be 60%. I'm sorry, 60%. So now you have to calculate 60% of 24,000. You will get 14,400. When you do the calculations, 60% of 24,000, you will get 14,400. About that, what the question is telling? The stock was sold, but for 10% profit. Gain means profit. Again you have to calculate 10% of 14,400. Do the calculations. Whatever amount is you are getting, you have to add in 14,400. Do it now. Then you will get 15,840. Sold at 10% profit, the question told. So 15,840 is the amount which business realized or business got by selling 60% of stock. Got it, both of you, how the calculations we are doing?
Yes, ma'am.
Okay. Pavitra?
Yes, ma'am.
Okay, dear. Now what will be the journal entry if the remaining stocks are sold? No partner is taking, business is selling and business is getting cash. Then very simple, cash or bank account debit to realization account. Come in the credit side of realization account. What you will write in the credit side? You have to write, what you will write? By bank account, and you can write in bracket stock. By where you are getting this cash, 15,840, you have to write in bracket stock. By selling the stock, you are getting this. And all the working notes you have shown properly separately. So in this way you have to do. Now the fourth adjustment. Trade creditors took over investment in full settlement. Again, very important concept. Kindly write it down. In dissolution chapter, whenever any, listen carefully, write it down correctly what I am saying. In dissolution chapter, if any external liability, I am talking about external. External liability means creditors, any bank loan, any financial institution, any bills payable, any bank overdraft. Any external person who has given loan to our business, that does not include partners. That is why I am focusing. You should not get confused. Liability means partners loan. No. Partners loan is a different thing which will not come here. External liability means there should be some external person, outsider, from whom business must have taken loan. Now business will repay them. They may be creditors, they may be bills payable, they may be any bank loan, any financial institution has given loan to our business, like these persons. So for them this rule is applicable. If they are taking any asset of our business for settlement of their loan, that is also full settlement, no entry will be passed. No entry means there will be no journal entry. Assets are going out, liabilities are decreasing, both are adjusted. So no, but you have, suppose the question tells you to pass the journal entry, you can't leave like that. You have to write no entry. Like this you have to write and you have to explain. It's not just if you will leave, teacher will cut your marks. So you have to write no entry. So for fourth there will be no journal entry. So nothing will come in realization, nowhere. So this rule is applicable. Again I am repeating, whenever the external liabilities are paid in full settlement through the assets of the business. There are variety of questions I will make you do once I finish the syllabus. I am having lot of questions with me. All are handwritten only. I will send those questions, each and everything we will do in class. In those questions lot of journal entry will be there, where you will understand there will be different cases. Suppose sometime what will happen, some creditors, they will take half of the payment through assets, try to understand, and remaining half payment creditors would like to receive in cash. Question will tell you clearly. In that case, suppose for example 1 lakh, creditor needs to be paid 1 lakh by the business. Creditor is saying, out of this 1 lakh, 60,000 I will take one of your asset, maybe investment, plant and machinery, whatever. That is for 60,000 of my payment. So for that no entry will be passed in our books. That asset, whatever value of the asset is there, if the creditor tells I am taking for 60,000, that's all. Just we have to give the assets, accounts should be settled, so no entry for that. What about the remaining? Now the creditor will tell, rest of the 40,000 of my loan I want to take as cash. So for 40,000 we will be doing the entry. What entry we will be doing? Realization account debit to cash, being 40,000 paid to creditors, and in the debit side of realization account you can write to cash, bracket creditors 40,000. Are you getting my point? Pavitra, Sachin, how the question is going to be solved?
Yes, ma'am.
Yeah.
Yes, ma'am.
Yeah. So this rule is applicable first thing for external liabilities, not for partners. Write it down everything. Second, this rule is applicable only for full settlement. Half of the settlement is done through cash. Then for cash you have to pass a journal entry. If any if any creditor or any external liability, they are asking payment for by taking any asset, then it's okay. But for making them payment through cash, you have to pass the entry. For that also no entry you should write. It's not no entry means you will leave. You have to write no entry. Like that you have to write if you are passing journal entry. Now next. Kanav agreed to take over the responsibility of completing dissolution at an agreed remuneration of rupees 12,000. Till here read, no need to write the further, we will read afterwards. So by reading this, what you understood? Who is Kanav first? Kanav is a partner. Now he has agreed to take over the responsibility of completing dissolution at an agreed remuneration of rupees 12,000. Kanav is saying, I will do all the this dissolution process. Whatever expenses are there, I will take care, because and to bear realization expenses, question is telling. Kanav is telling whatever the realization expenses are there, I will bear. So firm is paying remuneration. Now what you have to do? So the journal entry will be, kindly write the journal entry both of you for this, the fifth adjustment I am telling. Journal entry will be, firm needs to make payment of this 12,000 to Kanav. So realization account debit to Kanav's capital account. Write it down please, the journal entry for fifth adjustment. Realization account debit to Kanav's capital account. 12,000, 12,000. Now in realization account, in the debit side, you have to write to Kanav's capital account. 12,000 in amount column. In bracket, you have to write remuneration. Bracket you have to write everything. So remuneration 12,000 you have to write. Now see, and to bear realization expenses means Kanav is saying you just to firm you pay me 12,000. I will check whatever expenses is happening. I will take care realization expenses. Actual expenses of realization amounted to rupees 8,000. We have nothing to do with this actual expenses. Again there is a point, it's not every time. See, we should ignore actual expenses of realization when the partner says I will bear the expense and the firm pays him remuneration. So note the point what I am saying. What I said, if any partner agrees to take the responsibility of realization expenses and firms pays him remuneration and the partner says himself I will bear the expenses, then if any actual expenses of realization account is given, you should ignore it. We have nothing to do. Firm is not responsible for this 8,000. 12,000 firm paid and Kanav said I will take care of everything. That's all. Now whatever expenses, maybe 1 crore also, Kanav needs to bear that expenses because he said I will bear. Suppose this line is missing in your question. This line is not there to bear. Means Kanav is not saying I will bear. Then what will happen? Then you have to see how much you paid, how much expenses, and how, if suppose in this case, if and to bear realization expenses is missing, already 12,000 paid, then Kanav needs to like return 4,000 rupees. So in this way the question will go. But in this question he already said that I will bear. So we have nothing to do with actual expenses. It may be 20,000 also. Firm will not pay anything else. Are you understanding? Pavitra, Sachin?
Yes, ma'am.
Yes, ma'am.
Okay. So write it down these points here. What in your own words, for your understanding you can write it down. Now important note. Whenever assets are used to pay outside liability, no entries are passed, as I told you and I explained in detail. Now we will see the realization account. First, what I said, all the assets from balance sheet you have to make empty. You have to transfer into realization account. So for transferring all the assets to realization account from balance sheet, the journal entry will be realization account debit to assets account. So 2 stock 24,000, 2 debtors 19,000, 2 furniture 40,000, 2 plant 2,10,000, 2 investment 32,000. You have to write all these amounts on the debit side of realization account. Why? You are transferring the assets from balance sheet. Now, and this to Ashish capital account, already I told you, Ashish is a partner. He is taking the responsibility of paying external liability of the business. So the journal entry will be realization account debit to Ashish capital account. That is why to Ashish capital account 9,000. In bracket you can write Mrs. Ashish loan. She is external liability. Don't get confused. Now after that, Kanav is a partner who is ready to bear the realization expenses and firm has paid him remuneration. For that, the journal entry will be what? Realization account debit to Kanav's capital account. So in the debit side you are writing to Kanav's capital account, in bracket remuneration 12,000. Now come to the liability side, liability side of the balance sheet. Now all the liabilities you have to transfer to where? All the liabilities will come in the realization account credit side. So what will be the journal entry for transferring liabilities? All liabilities account debit to realization account, one by one. So as I told you the concepts, if investment and investment fluctuation fund both are there in assets liability side, you have to do the transferring, that's all. So investment fluctuation fund is there, investment is there. Investment you wrote in the debit side of realization account. Investment fluctuation fund we are treating it as liability. So you will take to credit side of realization account. So write it down by investment fluctuation fund 4,000. By trade creditors, how much trade creditors is given in your question? You have to see and you have to write 42,000. Then see, employees provident fund. Okay, employees provident fund. This amount you should pay to employee. It's a liability, 60,000. By Mrs. Ashish loan. Okay, 9,000 rupees. This is also external liability. That is why we are showing in the realization account. Then the Ashish, he is a partner. He took furniture for 38,000. That is why the entry will be, if taking asset by any partner, then partner's capital account debit to realization account. In the credit side, by Ashish capital account 38. In bracket you can write furniture. Then debtors realized 18,500 and plant 2,31,000. So the firm received money by selling debtors plant. So bank account debit to realization account. If any assets are sold, then here you have to write. By bank account, debtors 18,500, plant 2,31,000. You can add both and you can write in the outer column 2,49,500. Then Kanav, he is a partner. He took stock that 40% at 20% less. We did everything. So the journal entry will be, if again any partner takes any assets, partner's capital account debit to realization account. I am repeating again and again so that it comes clear to you. It becomes clear to you. So you can write in the credit side. By Kanav's capital account in bracket stock 7,680. We did everything, the calculations, everything. Now stock, the remaining stock of that 60%, we sold for 10% gain, that also we did. So from there what will be the journal entry? If 60% stock sold in the market and the business realized the cash, bank account debit to realization account. In the credit side, by bank account bracket you can write stock. You sold the stock, remaining stock 60% and you received 15,840. Now if you read the question properly, question doesn't tell about making payment of employees provident fund. You can't leave. You have to make the payment. Again, kindly write it down as an important note. Like in this question, they didn't say to make the payment to employees provident fund 60,000. You have to make the payment. So whether question tells you or not about making payment of liabilities. If the question tells, do accordingly. If the question is silent, you have to check whether all the payments are done or not. If any liability payment not done, you have to do at book value. This is the rule. If the question is silent, question doesn't tell you to make the payment, you did the transfer entry, you transferred the liability into realization account, then you have to do the payment also yourself at book value, whatever value given in balance sheet. Same rule apply for assets. You transferred all the assets. Sometime the question will be silent about some particular asset, whether asset sold or not, like that you won't be clear. In such a case, when the question is silent, question is not telling you to sell a particular asset, even though you transferred it, simply see the book value and sell the asset at that book value. So what will be the entry? Bank account to realization account. Whatever asset question is silent, you have to sell yourself and do the entry. Are you getting my point, Pavitra, Sachin?
Yes.
Yeah, kindly write these points here, whatever I am saying. If you have any doubt, you can ask me. Now after doing so, see, employees provident fund is a liability, question is silent. That is the reason we are doing payment ourselves. So to bank account. For doing payment of any liability, journal entry will be realization account debit to bank account. So in the debit side you are writing to bank account. Employee provident fund 60,000. In this way we did everything. We sold all the assets. We did everything. If anything is missing, you have to check and do it yourself if question is silent. That is the rule. You can't leave if the question is silent, because firm is going to close. Business is going to close. Anyway, you have to sell the assets. You have to pay the liabilities. For that, question is silent. You can do it yourself on book value. But again for intangible assets, this is not applicable. Write it down. Intangible means suppose goodwill, trademark, copyright, so any software, any license, all these are intangible assets. Suppose you are doing the transfer entry from balance sheet, and when you read the question in adjustment, nothing is given about their sale. So you have to leave it. So write it down clearly. For intangible assets, if question is silent for selling the asset, just leave it. You have to do nothing. But suppose it is for tangible asset, okay, then what you will do? For tangible asset, if the question is silent, you have to do the selling part yourself. You can't leave as it is. So at book value, you have to show the selling price. For example, at book value, if a particular machine is 1 lakh, question is silent, question doesn't tell you to sell that particular machinery. You can't leave. In the credit side, you have to write by bank account 1 lakh rupees. So there is a difference between tangible and intangible assets. Write it down the points, whatever I am saying. Now for liabilities. See, for liabilities, what you will do? Suppose provision for bad and doubtful debts given. Suppose provision for depreciation is given. All these, to whom you will do the payment. Now you have to think in this way. External liability, there should be some person, external person from whom business has taken loan. Then only business can do the payment. Provision for bad and doubtful debts or provision for depreciation, all these, or investment fluctuation fund, all these are liabilities, but all these are created out of the profit. So whom you will make the payment, you should leave as it is. Are you clear whatever I am saying? Yes?
Yes, ma'am.
Yeah. So you have to think, little bit you have to think. When suppose you are struggling somewhere, so you have to think, okay, provision is created out of the profit, so we have nothing to do with that. We can't pay to anyone. So just leave it. In this way, you have to think logically. There should be some person to whom you have to make the payment, like that. So in this way we did. Now you have to, as usual, you know, this is ledger account, so do the debit side, credit side totaling. You have to add all the amounts. If you see in the credit side, 4,000 plus 42,000 plus 60,000 plus 9,000 plus 38,000 plus 2,49,500 plus 7,680 plus 15,840. You have to do the calculations in the rough work, or add all together credit side. You will get 4,26,020 rupees. Right in the debit side also, credit side is more than debit. You have to subtract the debit items. First add it, then subtract. You know how to add it. 24,000 plus 19,000 plus 40,000 plus 2,10,000 plus 32,000 plus 9 plus 12 plus 60. When you add all these together, whatever amount you are getting in your rough, just subtract from 4,26,020. Then finally you will get profit of 20,020 rupees. Do it and check whether you are getting or not. Do it now. Then this profit, who is going to enjoy? Obviously the partners. To gain on realization account, you have to write to gain, or you can write to profit on realization. Partners capital account, you have to credit. Who are the partners? Ashish, Kanav. So what is their ratio? See the question. 3:2 ratio is given. So this 20,020 rupees you have to distribute in 3:2 ratio. Ashish will get 12,012 rupees. Kanav will get 8,028 rupees. Question is solved. Any doubt in this particular question, dear?
No, ma'am.
Oh,
No, ma'am.
okay. Now very important concept. These are the notes I have written myself. Tangible asset, if no information is given in question regarding assets sold or not, then we will assume assets are sold at book value. You can also write it down. So next question, that is question number 3, we will be doing in our next class. Okay. By doing that, our chapter will come to an end. Then we will move to shares. It's a very, very big chapter, very, very time taking. Shall we move to shares or cash flow statement? Yes, tell me both of you. Issue of shares?
Anything's fine.
Okay. Shares is okay for you people? Issue of shares okay?
Yes, ma'am.
Okay. Yes,
Okay, ma'am.
Pavitra, okay, fine. It's a very, very big chapter. We will start. It will take lot of time and it's tough also. Really, it's very tough. If you understand, it is easy. Let's see how you people are understanding that chapter. So far, which chapter you felt easy? Yes, Pavitra, you tell me. We have finished all the chapters, na? Dissolution. Okay, leave dissolution. Tell me which chapter you feel easy in accounts so far. What we did in class.
Ma'am, goodwill and admission was easy.
Okay. Retirement death you feel difficult. Yes, Pavitra, you feel difficult.
It was easy, but comparatively, those two were more easy.
Okay, fine. Yes, Sachin, you tell me, dear, which chapter you are feeling easy so far?
Ma'am, yes, ma'am. Goodwill, admission and retirement. These
Oh,
three are easy.
okay. Dissolution you are feeling difficult.
Ma'am, compared to those three, this I have to get my more focus.
Okay. Yes, you have to get dissolution is little bit like that only. Okay, fine,
Yes,
dear. Okay. That's all for today, okay?
sure, ma'am.
Next class we will
Sure,
continue.
ma'am.
Yeah, send me the notes, both of you.
Sure.
Yeah.
Yes.
Thank you, ma'am.
Thank you, dear.
Thank you, ma'am. Bye.
Bye. Thank you.